PayPal stock is down over 3.5% year to date. I'm sure none of you are surprised. This is PayPal. It goes up, then it goes down. It's been a roller coaster on the stock over the last 5 years. The stock is down over 48%. And it's been pretty much flat since late 2023, down like 2%. So the question is, when is PayPal finally going to move? Is PayPal still overvalued? Is there something wrong with PayPal? Because it's been recently going down on the news from Apple Pay introducing some kind of a wallet tap to cash where you could tap two phones and then you could pay each other with your Apple phone using Apple Pay instead of using PayPal. So there's a lot of competition. And the question is PayPal still a buying opportunity at this price? And I'm going to tell you my favorite idea for PayPal, my favorite trade, which is mainly in the options market. I did it many times. It has proven to be the best strategy as PayPal has been flat for a while. And I still believe this is the best strategy, the most profitable one. And I'm going to share it with you here at the end of the video. But for PayPal, in terms of the whole thing with Apple Wallet, I honestly think the risk is massively overblown, and PayPal sold a lot on this news. If you look at the market share in general, in terms of retail, it says payment method used as of the second quarter of 2024. You have Apple Pay. If you look here in the blue, Apple Pay is now 5.5% market share. It has been increasing in market share. You look at PayPal, based on this data, PayPal went from 4.6% to 3.7% on the quarter. Now, I don't believe this is a reason to panic because it has been cyclical. As you can see in the market share, it goes up, it goes down, it goes up, and it goes down for something like PayPal. But even for Apple Pay, it went from 4% to 2%, now it's 5.5%. So I'm not sure if I'm going to believe this data. But if I look at PayPal in general, volumes are still growing. This is not a dying company, guys. As of the first quarter, they still grew 14%. Revenue still grew 10% in terms of FX neutral on currency neutral basis. Transaction margin increased 4%. Non-GAAP operating margin increased 18.2%. This is not a dying company. With volumes increasing 14%, this is not a dying company at all. And again, you could maybe worry a little bit about competition. Competition is real over the long term. But as of right now, PayPal is still growing, and I believe the stock is priced in like it's never going to grow again. It's priced in like a bond. I'm going to tell you what I mean here very soon in the video. But this company is still growing. It's not a dying company. I look at the assets, 9.6 billion, almost 9.7 billion dollars in cash and cash equivalent, short-term investment 4 billion. This is pretty close to 14 billion dollars in total. So you have 14 billion dollars of cash. Total long-term debt is like 9.6 billion. So they have a lot of cash to pay down the debt, to do acquisitions, or maybe expand a little bit, invest more in organic growth, but also to do buybacks. And this is what this company has been doing. It has been creating a lot of shareholder value for shareholders, of course. Maybe it doesn't seem obvious at the moment, but over the next few quarters, those buybacks are going to make their way into earnings per share growth. And I encourage you to look at many different companies that have little to no growth and they've been doing a lot of buybacks. Stocks like NVR, look at the chart of NVR, mainly buybacks over the very long term. Look at the chart of AutoZone. AutoZone and PayPal, they grow at the same pace. Maybe PayPal grows a little bit more than AutoZone, but AutoZone bought back like 50% of the market cap over the last 10 years. And with PayPal, with the free cash flow yields that it has the same potential. If they just keep buying back stock at such low prices, the stock eventually has to go up. But the longer it stays here, the better it's for you as a long-term investor because PayPal can buy more stock cheaper. The worst thing the company can do is buy back stock at 52-week high when the multiples are inflated. But now you have such bad sentiment, and the longer it stays, the more the company can buy back stock and the better returns you're going to have over the long term as long as the company doesn't decline. Again, look at NVR, look at AutoZone, look at O'Reilly's. These are companies with low growth, but they have a good buyback model and it's been working for them. But in terms of the free cash flow for PayPal, they guided approximately $5 billion for 2024, and I believe they can achieve it. Now, if we take the $5 billion, they still have the stock-based compensation, which is unfortunately high, of $1.5 billion. So it's not the entire $5 billion is going to buybacks. A lot of it goes to offset stock-based compensation. And PayPal did take it out of the GAAP earnings or non-GAAP earnings, which is good. But at the same time, I wish they would reduce it a little bit. It would help a lot. But in terms of, stock-based compensation is 1.5 billion. If we take the 1.5 billion out of the 5 billion, we're left with approximately $3.5 billion of free cash flow. The $3.5 billion, you take it out of the market cap, the free cash flow yield is pretty close to 6%. So you're getting a 6% free cash flow yield on PayPal. This is higher than what you're getting in short money market funds, which is 5 to 5.5%. You're getting a 6% free cash flow yield on PayPal. And most of the free cash flow is going to buy back stock. So PayPal can buy back 5 to 6% of the market cap every single year. Now imagine what this would do over the very long term. Again, maybe it doesn't look so well. Maybe they're not doing anything in the short term, but over a long period of time, the more PayPal stays flat and the more free cash flow they grow, or it just stays the same. They could buy back stock. It's going to deliver a lot of returns over the long term. So I think about it as a 6% annual return on a worst case scenario if PayPal can keep up the 5 billion, and I believe they can easily do it. Now, the second thing you could get is a revenue growth. Revenue growth is expected between 7, 8, 10%. Now, they did grow a little bit more than 7%. I believe the total revenue growth for the first quarter was around 10% on FX neutral, but it's expected between 7 to 8%, then 6%. So I would say on average 7%, not 8%. So you're getting a 7% revenue growth on, I would believe it's very fair. I mean, even if there's competition, there's so many players, I'm not saying PayPal is going to get back to 20%. With the high competition, PayPal should be able to grow around 7%, 7 to 8%. But if we take 7%, 6% free cash flow yield, this is 13% annual return for buying PayPal or for holding PayPal on the low end. On the high end, you have the potential of a multiple expansion because now, even including the stock-based compensation, PayPal is trading around 14 times forward earnings. Now, if PayPal manages to do some kind of innovation that the CEO has been promising us, and he wants to, I believe, shock the world or something like that, but if he could pull it off and PayPal grows a little bit higher than 7 or 8%, maybe 10 to 12%, maybe that would cause a lot of optimism, and PayPal's PE ratio could go from 14 times to maybe 18 or 19 times. If this does happen, then your 13% return is like 15 or 16% a year, which is like a double every 5 years. So for me, I'm looking at PayPal. If I ignore all the noise on Twitter and everyone calling it dead and all the bad sentiment, the numbers are still very strong, and I like it over here. However, I believe there is a better trade on PayPal. And this is what I've been doing over the last few months. I don't currently own any options, but I need to do that again. And this is, for example, the $55 put. Now, if you sell the January 2025 $55 put, you'll get a 375 credit. 375 credit, this is around a 7% return. So you're getting paid 7% for the next 6 months to get to buy PayPal at $55 per share. This is like a 12 PE ratio. That's dirt cheap. But if you buy it at 55, you already collected the 375 credit, which means your adjusted cost basis, including the premium, would be $51.25. This is dirt cheap for PayPal. And PayPal rarely gets to $55. I don't believe it ever did. I sold some 55 puts before. I sold some 50 puts. I sold some $60 puts. But I need to be selling those puts. But for me, I'm seeing a 7% return. To get to buy PayPal at 55, your cost basis would be 51, 7% for 6 months. This is a 14% annual return. And this is amazing on a stock that hasn't moved yet. It will eventually move, and the move is going to be tremendous. But for me personally, as I'm seeing better opportunities, I like to monetize my cash position by, selling 55 puts on PayPal. Worst case, I own it with a cost basis of 51.25. I mean, this is dirt cheap, no matter how much competition there is. With a good balance sheet, they could buy back so much stock at $51 if it ever gets there, or $55. So this is my favorite trade on PayPal. But I'm not seeing anything wrong with the company. I'm seeing a lot of bad news, but I'm not seeing it make its way into the fundamentals, which are improving. And this is my honest opinion on PayPal, not financial advice or anything around the options, just what I would prefer to do. But thank you for watching it. I hope you enjoyed it. If you did, please press the like button and let me know what you think in the comments. And I'll talk to you in another update.